She's selling Sacramento. Agent Keys. She's selling Sacramento. Oh yeah. Oh yeah. Agent Keys. Agent Keys. Yeah. Selling Sacramento. She is. She's selling Sacramento. Agent Keys. She's selling Sacramento. Oh yeah. Oh yeah. Selling Sacramento. She's selling Sacramento. She's selling Sacramento. Oh yeah. Agent Keys. Agent Keys. Yeah. Selling Sacramento. She is. She's selling Sacramento. Agent Keys. She's selling Sacramento. Oh yeah. Oh yeah.
Selling slack, selling slack, selling slack, selling slack, selling slack, selling Sacramento, buying the block back. Selling slack, selling slack, selling slack, selling slack, selling slack, selling Sacramento, buying the block back. Selling slack, selling slack, selling slack. Selling slack, selling slack, selling Sacramento, buying the block back. Selling slack, selling slack, selling slack, selling slack, selling slack, selling Sacramento, buying the block back.
Agent Keys. Agent Keys. Yeah. Selling Sacramento. She is. She's selling Sacramento. Agent Keys. She's selling Sacramento. Oh yeah. Oh yeah. Agent Keys. Agent Keys. Yeah. Selling Sacramento. She is. She's selling Sacramento. Agent Keys. She's selling Sacramento. Oh yeah. Oh yeah. Selling Sacramento. She's selling Sacramento. She's selling Sacramento.
Countdown.
Okay.
Right now.
5, 4, 2. Let's go.
Hey everyone, it is Wednesday. You're listening to 97.5 FM KDEE. I am Agent Key and we are Selling Sacramento. Selling Sacramento is brought to you every Wednesday by Matthews and Company Realty Group, where I, Agent Key, am the broker and the owner, where I love helping you buy, sell, and retain real estate. Check me out at agentkey.com, AGENTKEE.com, and let's have the conversation. If you are looking to get into home ownership, just looking to have the conversation, wondering what does it take, go to my website at agentkey, AGENTKEE.com. And at the top of my site, you will see a number of ways to get in touch with me. You can send me an email, you can give me a call, schedule an appointment, and let's chat about home ownership opportunities for you. On today's show, we are talking about higher demand, lower interest rates, and there is a new buyer frenzy heating up in the market. We are going to talk to you about that today. But before we get started, if you are watching on social media, Facebook, LinkedIn, YouTube, you will see that I have a guest here in the station with me, Mr. Dyke Mundy. How are you, sir?
I'm doing great, Keith. Thank you. Having a great day.
Thank you for being here. Tell the folks who you are.
Well, thank you for having me.
Yes.
It's great to talk with you and your audience. So again, Dyke Mundy, I'm the home mortgage sales manager at Tri-Counties Bank. Tri-Counties Bank is a community bank headquartered out of Chico, and we basically cover California, Oregon, and Nevada, with branches from Bakersfield to the Oregon border.
And you are no stranger here to 97.5 FM. You've been on Jay's show before, and you recently held an event last month. Was it just last month?
Just a week ago. So we did hold an event at the Oak Park Charter School.
So technically it was last month because today is February 1st.
Good catch. Good catch.
So tell us about the event, because you are having it again and it was super successful. So our listeners need to know what this event was.
So it was awesome. And for those listening who attended, thank you. And hopefully you got something out of it, or a lot out of it. But it was an incredible event. It was a first-time homebuyer workshop. And I call it a workshop because we were really trying to educate people on loan programs, on underwriting, on credit, and just what's out there and what it's going to take to get them in a home. And for those that own a home and wanted to refi, wanted to talk to them about what refi opportunities, because as you know, what a lot of people hear through the media sometimes is from a macro level, a big picture.
Yeah.
And it really doesn't tell the whole story. And so for us, we wanted to get down into the nitty gritty and we had about 50 people attend. It was a packed room. So that's why we're going to do a second one, because we couldn't fit everybody who showed up.
That's a huge number when you talk about home buyer workshops, because home buyer workshop is about as common as an open house. And so you really don't get the return on that. So what was it that was the draw that got people there? What do you think?
So I think it was two things. One, you don't always get the chance to bring an underwriting manager into the field. That's the person who makes the decisions. It's the ultimate decision maker, the power of the pen. Okay. So my boss was able to join us and really get into nitty gritty about when you talk about income and credit, because that's what he does every single day.
Okay.
I think the other is Tri-Counties Bank. We offer some incredible programs, first-time homebuyer programs, and some down payment assistance programs that we have access to.
Can we get into a couple of those?
Yeah. So we can talk about a couple different things. So let's first talk about a grant. So a down payment assistance. We have access to two programs. The first is WISH, and some people out there have heard about WISH, some have not. It's money that the Federal Home Loan Bank sets aside every March, opens beginning of April. And it's really to help low to moderate income borrowers looking to buy a home, specifically first-time home buyers.
Okay.
It's a grant, so that's forgiven over a 5-year period. And it works. WISH has, so let's say it's a 4-to-1 grant. So let's use numbers. If you were to bring $5,000 to the table, whether it's savings or a gift, you would get $20,000 from WISH. Last year, that maximum you could get was $22,000. So it would mean the borrower would bring in $5,500.
Okay.
This year, it's going to be increased to $29,000.
Wow.
So $7,200 of your own money gets you $29,000. And again, over 5 years, it's forgiven 20% of that $29,000 every year. So, roughly $6,000 a year.
Yeah.
And it's a grant. So you're not paying it back. There's no loan on it. Unless again, you sell your home in the first year and say, hey, I got in, now I'm going to sell it. Well, then they would ask for a portion of that back.
That is amazing, the amount of money. So if someone had the 7,200, they could get the max at 29,000, and they'd be coming to the transaction with, what is that, $38,000? Just about 39?
36, roughly 36.2. And then we have another 10,000 through a nonprofit we work with, the National Asian American Coalition. So you add 10,000 on top of that. So now you're up in the 45, 47. And if they can scrape up a total of 10,000, you're close to $50,000.
Wow. So in a market like this, where not only have we seen prices increase, even though they are now starting to go down, bringing in that kind of money, adding it, that $50,000, let's say if someone was able to attain that number, that is a significant difference. That makes a significant difference in a purchase when it comes to a mortgage payment.
Not only that, but yes, just qualifying. Because again, it's for low to moderate income borrowers. So you're not giving it to people that are making a lot of money. And the way WISH works is the more borrowers in the house, the higher the income limit.
So tell us about the qualifiers. What are they?
So the key qualifiers, and again, without getting too technical, we do this in the class because face-to-face it's a little easier, but you use the median income for areas. So Sacramento, that median income would be $102,400.
Now, was that raised? Because I believe the last time I heard it was around 80.
That's the same. So that's 100%.
Okay.
And that's for 2022.
Not the 80%.
The new number
of it.
for 2023 will be coming out in April. So the good
So they're
news
allowing
is
100% of the median.
No, but I'll start with that just so people
Okay.
people understand. So that number will go up in April. We don't know where it's going to go, but it's going to go up. That's also a positive to help.
That is
people
great.
qualify.
Yeah.
So take 80% of that. That gives you 81,000 you can use to qualify. Now that's for a 4-person family.
Okay.
As the family number drops down to 2 or 1, that number also drops. Okay. So I'll give you an example. So for a family of 1, it would be $56,800 that one person can make.
Okay.
Family of 2, $64,880. 3, $72,960, and on up. Okay. So you can see the more family members you have, the more income you can have. Now, the key is everybody who lives in the household, who you're counting in your family, if they're over 18, or if you have an in-law live with you and they happen to get Social Security, I've got to count that as their income.
Okay. Okay.
So you add all the income together. If you meet that requirement, that's really the only requirement. Now it's let's get them with you and find a home. Right. And I worked out some numbers while people were there, and I showed them how somebody with a 4-person family, 5 is even easier, but 4 is easy, can qualify for a $400,000 home. What I'll call layering these different down payment programs, bringing in $10,000. Okay. And that's it. Okay. And again,
with
I'm not saying that's easy.
With 4 people, it's more doable.
It's more doable, and you can use gift money.
Right. Oh, that's
and you can layer it. If the city has another DAP, which sometimes they do, especially early in the year, we can layer a 3rd down payment assistance. So the goal is to try to provide as much assistance through down payment assistance money, so that because the price of homes is still high, to lower that loan amount so they can qualify and they keep their payment in line with what they can afford, what they qualify for. Right. To me, it's different. I mean, I can qualify for this, but I want to make sure you're comfortable making that payment. Yeah. And still have a little bit of debt, because people may have a car. Yeah. There may be a little student loan, and there's going to be some credit cards. So you want to make sure.
And then making sure that they can actually buy a house that is not only affordable, but something they can see themselves living in, because there are a lot of programs out there now that people qualify for. However, the qualifications are $300,000 or less. And then if they look for something like a condo, then the HOA takes them out, because they've got to take off a few $1,000s for every $100-something of HOA, and it reduces their affordability. So having a program that actually adds money to increase your purchase power, that's the game changer. So you talked about, you said you actually have a couple programs that you're going to talk about, but before we get off of WISH is happening. You're taking applications for WISH in March. How does that work?
So right now we're talking to people about it, like I am right now. Again, WISH. It's a certain amount of funds that get allocated. Last year was 11.2 million.
Hasn't officially been released yet, though, right?
It's on their website.
It's on the site.
So they've announced it. They've set the 29,000, and it will go live on or be released. You can call it on April 4th.
April 4th is the day. So what does that mean, released? So can people, so they can get into I'll let you explain that.
No, great question.
Okay.
You're already a step ahead of me.
I know. Let me calm down.
So right now it's getting the word out, letting people know what's out there.
Mhm.
Then it's getting together with a home mortgage consultant and saying, okay, let's find out what you qualify for, assuming these numbers. Because what can
Right.
you bring? When do you have the credit? What's
Yeah.
your income look like?
Yeah.
And what are you going to qualify for from a grant perspective? And here's the purchase price and the loan amount that you can qualify
Mhm.
for.
Mhm.
Then we get them ready to go. As soon as April 4th, we submit it because you have to go into contract. So during now and April 4th, they start
It's
looking.
time to get
They're going to
into
go
contract.
and spend time
Yeah.
with you looking at properties.
Yeah. So they can be in contract, and it's best to be in contract because on April 4th, they will need a contract in order to
Correct.
submit.
Correct. And then from there, I like to say give us 30 days, but at that point, if we're already pre-approved and ready to go, we could probably close in 21 days.
Okay.
So closing is pretty quick. We approve it internally.
Mhm.
We then send our approval to the Federal Home Loan Bank
Mhm.
because we understand what we're doing. We've done this before.
Mhm.
It's just a quick review. We're good. And then away we go.
And you just said something else that's very key. You said we, meaning Tri-Counties Bank, which implies that not every lender can do this.
Not every lender. You have to be a member of the Federal Home Loan Bank, and you have to then agree you want to do this. And so there's very few banks. There are others,
Mhm.
but there aren't very many who are
Mhm.
part of the Federal Home Loan Bank who have access to this program.
Okay. Okay. We are going to take a quick break, but before we do, I want you to tell everyone about this event that's coming up where they can get more information about Wish.
So we're going to have our second event. The first one was such a hit, and we have a bunch of people that want to get in. It's going to be Tuesday, February 28th from 5:30 to 7:30 at the Highlands Charter School. That's the Highlands Charter School in Oak Park at 2520 33rd Street.
Okay.
And it will be again on Tuesday, February 28th. Please right now call the chamber. I don't have the number off the top of my head. We'll make sure we get it. And they will,
467.
oh, I'm sorry.
467-8878. 916-467-8878. I don't have that memorized. I had to look too.
I don't either, but we want to make sure we get RSVPs this time. We didn't do it last time, and so we can get everybody in. We'll probably have a cutoff at 50. So we hope to get 50 people and really do some educating, answer questions, and make people feel more at ease about the process and what they're going to need to do to qualify to buy a home.
So let me give you guys that number one more time. In order to attend this event on February 28th, you will need to RSVP by calling the California Black Chamber, at 916-467-8878. 916-467-8878. We're going to take a quick break. When we come back, we're going to talk about some more programs. We're going to tell you more information about how the market is changing, and we will give you that information again about that event. You're listening to 97.5 FM KDEE. I am Agent Key, and we'll be right back. Hey, you guys, thank you for tuning in. Give us a shout out if you're there. Post something in the comments section. If you have any questions for Dyke, go ahead and write it in the comments section, and he'll answer them for you. We'll answer them live on air. I'm going to run and get a pen because I thought there was one there, but oh, you have one there?
Yep.
I'll let you keep your pen. Oh, thank you. So let me write down that date again. February 28th,
5:30, 7:30.
5:30 to 7:30 at Highland Charter.
Charter School in Oak Park, 2520 33rd Street.
2520
33rd Street.
33rd Street. Highland Charter High School. Highland Community Charter.
I have Highlands Charter School in Oak Park, so that's what we call it. So yeah, there's a
Oh, it's HCCH.
okay,
HCC,
that one's
Highland
something
Community
else.
Charter High. Yes.
I know that for Del Paso, they just had their graduation last Thursday, so I think they
Oh,
graduated
really?
177 people.
Oh,
So that was
wow.
awesome.
I visited the Oak Park campus yesterday, and
Okay.
they gave me the VIP treatment. I said,
Did you
oh
meet
my
Camille?
gosh. She wasn't there
Oh, okay.
yesterday. Vaughn?
I did.
Vaughn gave me the
I've
tour.
been working with Camille. It was
Okay.
awesome. I mean,
Yeah.
She's the president. The principal.
Yeah,
of
she's,
both,
yeah.
and she's pretty awesome.
Doc said he had he reached out to her to give me the tour, but she wasn't going to be able to be there when I could be
Okay.
there. So Vaughn was excellent, and they gave me a little swag bag with a water
Nice.
bottle, and I was like, oh my gosh, with all this. So that's how I know Highland
You know
Community
that
Church, because it
exactly.
said HCCH. So it was really nice. And what they're doing over there is just amazing. The culinary program that they have going in. I don't know if you got a chance
No, I
to
didn't
see
see
it.
that.
They just redid the entire downstairs basement area. And when you walk down, it just looks so sleek. Full on kitchen with all of these huge
Wow.
industrial
ever show me that.
fridges. And yeah. And so, and they're going to be cooking for the neighborhood.
Good for them.
Yeah. So I'm
I think it's just great
my
people go
heart
back
just
and
gets
get your
so full.
education. You know,
Yeah.
get a high school degree,
Yeah.
30, 35, 40 years old. Hey, you know
Anybody.
what? Anybody
Yeah.
can do it.
Yeah. And for the resources to be available like that and the quality.
Uh-huh.
That's really cool. As soon as you walk into the principal's office, have you been to the principal's office? I went to the
in my
principal's
day,
office.
not a lot. when I was
Not
there.
here.
My
So-
coaches would have kicked my butt if I was there too often.
They have a
Oh my God.
Garibaldi painting, an original Garibaldi painting.
Do they
He
really?
painted. So it says something with regard to Highlands
That's awesome.
Charter.
He's pretty phenomenal.
Yeah. So he's going to be setting up an office space there.
Oh, cool.
Oh, we're back already? What? I heard you say that, but
We got 6-7 seconds now.
that's his painting back there.
Oh my gosh, that's incredible.
2. Come on.
Hey everyone, we're back. You're listening to 97.5 FM KDEE. I am Agent Key and we are selling Sacramento. And on today's show, we are having a conversation right now. Well, prior to the break, we were talking about the WISH down payment assistance program that is coming in March. And I have with me Dyke Mundy. Dyke, what is your title again? I just want to call you CEO, but you are not. But you behave like CEO.
I manage the home mortgage sales team
Manager of the home mortgage sales team for Tri-Counties Bank.
for Tri-Counties Bank.
And we were talking about the WISH program, and you had one other program that you wanted to tell us about, down payment assistance.
Yeah, because with these down payment assistance programs, the great thing is you can layer it. Meaning you can add different down payment assistance programs on top of each other. And that's what really helps people get to a loan amount where they can qualify and afford a payment.
Yeah.
So we have another program that we partnered up with the National Asian American Coalition.
Okay.
It runs very similar to WISH, so you qualify the same way,
Mhm.
and it's up to $10,000.
Mm.
So again, you use $10,000 plus the new amount WISH will be allocating or making available per borrower on April 4th, and that's $39,000.
Mhm.
And again, to get the WISH, it's a grant, it's a matching grant, so 4-to-1. So. But again, with both of those programs, that's a nice chunk of money
It is.
to use for down payment to help you get that loan amount down.
Now, do those funds run out on that second down payment
So
program?
yes, but the bank, we kind of help contribute to that.
Mhm.
And so I've already been told that if those run out, we're going to
Replenish it.
replenish it. So we're
Mhm.
looking to replenish that. And then the WISH funds, they usually allocate about 11 million.
Mhm.
This year, they ran out end of October.
Okay.
But one of the big banks that was just purchased is not going to be doing those anymore. So, and they were a big user of those funds. So
that
I'm
may
hoping
leave
it
more
may lead
funds
to another 30
available.
days, 45 days. But
Yeah.
I would tell people, don't wait.
Right.
Let's get into contract. Let's get you that money reserved.
Well, and also prices are a little bit higher than they were the last time WISH was around. So that's going to take up some more of the funds. Are they allocating the same amount, the 11 million?
I have not heard the dollar amount allocated.
Okay.
So if they do about the same amount, then yes, 22 versus 29 means it goes a little quicker. But
Mhm.
hopefully it's a little bit more that they will allocate.
Okay. And so if you are listening or watching us on Facebook Live, Dyke is here to answer any questions that you might have as well. Unfortunately, we are not taking calls because in the past, when we take calls, it slows the show down. Yes, my engineer said to say that. I was going to say something a little nicer, but he just is direct and to the point. But because it's only a 1-hour show, but we really want to hear from you. We want to hear what you have to say. We want to hear what questions that you have. So go to social media, either Facebook or YouTube or LinkedIn, whichever is the best way that you like to be on whichever platform, and give us your questions or comments in the comment section, and we will be sure to have Dyke answer them. We'll answer them live on air. We just get an opportunity to view them before you actually say it. So now back to the event on the 28th. You were talking about one of the reasons that you felt the event was so, that it had such a, not necessarily a great the underwriter was there, which was not the reason that you had such a great turnout, but they were able to answer more questions, and it was able to be a more successful
Yeah, and I call it
event.
more educational.
Okay.
And I think it really is about educating people. I mean, I think there's just, you talk to people and they don't really know what's available. And for somebody to miss the opportunity at $29,000
Yeah.
and then another 10, and then I'll talk about in a little bit another special purpose credit program we have. It just, to me, it's that's just, not acceptable in my mind. I mean, so I want to get out there and blow the bugle horn.
Yeah.
I don't want to be a bank or a company, a mortgage company that's the hidden gem, best kept secret. I want to make sure everyone knows what's available, and we're going to do our darndest to get them in the program. And if that doesn't work, we have other programs we can talk about. But I think it was successful because people, I was on the program with Jay a couple times. We had a bunch of questions. We talked about this money and what we were going to try to accomplish at the workshop.
Right.
And it just seemed what we were trying to do, what people wanted to hear, and what they came for, it's just matched up.
So they
it was
were
kind
ready.
of the perfect marriage for what they wanted to hear and what they wanted to learn, and what we were going to provide.
It sounds like they were ready. They were really ready. And I think that's the temperature right now for a lot of people too. They're ready to get out of the renting mode, ready to get into home ownership, but want to pair with somebody that they can trust.
Yeah, and I always say, if someone wants to talk to two different lenders, that's great. I mean, I'm not ever going to say there's one shoe fits everybody. I mean, I can take care of most needs of people, and if I can tell them, set them up with somebody that can help them. But everyone should, talk to a couple people just to get advice from a couple different people. But I know we offer something that most don't, and for a first-time home buyer, it's a big deal.
Yeah, it is. It is. It's important to really hold their hand in. I like the fact that you said you don't mind them talking to someone else, because I like to advise people, if you talk to 2 or 3 people, whatever it is that you're hearing consistently, that's probably the truth. If there's something that's way out there and no one else is saying it, you might want to kind of sit back and assess whether or not that is a direction that you want to go in. And so with regard to this particular program, though, you pointed out that your bank, Tri-Counties Bank, is one of the handful of banks possibly that are able to do this.
That's correct.
Yeah.
That's correct.
So tell us this. I'm looking to ask questions as if I'm the buyer. Okay. So I'm going to ask you a couple of questions. I asked our viewers to post questions. I don't see any questions yet. So I'm going to assume that there's somebody out there that has this question. If I am applying for a loan, and we talked a little bit about qualifying, what information will you need from me?
So it's a great question, and I don't think I can answer it with just a blanket statement.
What's the typical?
I would say what's typical is someone's going to want to see, the first is just to have a conversation and meet with the loan officer and say, okay, let me talk about what I'm trying to accomplish, and let's see what options I have for you, because there may be 3 or 4 different options or buckets that you fit in to help you get a loan and put you in that home, which is the ultimate goal. I.e., if Wish doesn't work, we can use CalHFA, which we can talk about in a little while. But typically, you're going to want. I mean, I'm going to get pay stubs, a couple months pay stubs, or at least a month worth of pay stubs. We're going to want to see the bank statement to see where the money is that you're putting down. A W-2 from the most recent, and sometimes a second year. It just depends on the situation. We'll call it 2 years worth of W-2s. And then possibly, depending on how your income, whether it's bonus and a lot of OT, or you have a lot of other additional income. If you're self-employed, we're going to need 2 years of tax returns. Okay. So that's really what you need to start. And then after you get going, we'll let you know, okay, we need a few more things. Here's a list. And the sooner you get us back those documents, the faster the loan goes. Right. And in some cases, you may bring us, we have just about everything. We only need 1 or 2 more items, and we'll get those along the way. But that hopefully gives you an idea of what you need just to get started.
Yeah, it does. And I really like that you said, and there may be a request for some additional items, and that how fast they get it back will determine how fast the loan will process. And setting expectations is really good when it comes to processing your purchase, because everything is under a time frame, under time constraints. And so I like to let buyers know in advance that the contract is a time sensitive document. And so when the lender asks you for something, make sure you respond ASAP, because it's on you. The days that go by can actually, one day of a delay can be a huge issue, especially what if the rate changes, or, what if the program is going to disappear, that kind of thing, when you could have gotten it done a day before or a couple days before. So don't stall. So if you are listening to this and you heard Doc give that list again, rattle off that list one more time.
So-
and this is just the general list.
So pay stubs for the last month.
Mhm.
W-2. So right now you're receiving your W-2 for 2022. You'll have
Right.
2021. If
Right.
you haven't received 2022, or by the time we close, you should have it by the end of January.
Mhm.
If you're self-employed or have a lot of variable income, then
Mhm.
probably 2 years of taxes.
Mhm.
And then bank statements, the last 60 days worth of bank statements.
Okay.
And we embrace technology. We have a way that people can go online and not only apply, but submit documentation through their computer or their phone.
Good.
But for those who don't like to use that and like the old-fashioned approach is I want to work face-to-face and I want to hand you my paper,
Mhm.
we can do that too.
Y'all still do
We
that?
can still do that. We try to meet the needs of our customers.
Have you ever found yourself going and knocking on the door?
I haven't for a while, but I know my reps have.
Okay. I know a couple of people that still do that. They said, "Oh, I had to go to the house." We do what we have to do.
We exactly. We do what we have to do.
And I apologize. Did I call you Doc? Did I say? I think
You
I
did,
said
but
Doc. Okay.
I let it slide. I figured no one caught it.
And, yeah, Doc Dyke. Somebody
Pretty
probably
close.
did. Yeah, it's pretty close. So you were saying that you wanted to talk a little bit more about the CHDAT loan. Give us.
Yeah, so Cal HAFA is another program that, again, some lenders choose to be a part of and offer it, and some don't. We do, and it's a great program. So I talked about WISH, and you qualify based on income.
Mhm.
So for some people, meeting those income requirements gets tough. And I know that's the frustrating part. Hey, I make barely over that. I'm over by $1,000, but
Right.
I can't qualify. It's a hard and fast line.
Yeah.
But then we can go to a Cal HAFA loan,
Mhm.
which is a 97% first.
Mhm.
It's a 3% second. The 3% second's a 1% rate that's deferred.
Okay.
And the first on the Cal HAFA first is around 6% today. So it's not like it's a really high rate.
Mhm.
It's basically 100% loan.
Mhm.
And it allows income up to 150% of median. So if you looked at right now in Sacramento, it's right around 150,000. I don't have the exact number off the top of my head. So it allows somebody to make a little bit more money yet still get a loan. And they even have the ability to do a 2 or 3% closing costs where they give you that money.
Mhm.
If you're not charged for it, you pay it back at the end. But when you use that closing cost portion, they call it the ZIP,
Yeah.
it raises your rate a little bit. And so
Mhm.
I tell people, let's do the first and the My Community second.
Yeah.
Hopefully between the seller and what you have saved, you can cover closing costs.
Right.
And I'll talk about something we can do to help people with that. But that's a way to get in and still have a great rate
Yeah.
on your first, and an incredible rate that's basically simple interest and paid at the end for 3%.
Now, 3 weeks ago, I would have said that this is a great time to ask sellers for money back for closing costs. And the reason I say 3 weeks ago is because part B of this conversation today is that we are starting to see the market change a little bit. And it's not I don't want to paint a broad paintbrush, but it's in some pockets. I'm not the only one. I was at an event a couple of days, actually yesterday, where there were probably 100 plus agents in the room, top producing agents. And the conversation was how the market is starting to change, how we're starting to see multiple offer situations happening again. And I just saw that myself over the weekend. I think I had shared that with you a couple of days ago. And when you have a multiple offer situation, when you know that you're in a multiple offer market, the last thing that you want to do is ask for closing costs when you want to be competitive. So I won't say don't do it. I will say if you're a buyer or if you're an agent listening, use caution. Because there's still a chance that you could get it, kind of feel it out, test the temperature in the room, call the listing agent, ask them, would the seller be open to it? Call the listing agent, ask them, why is the seller selling? Check the tax records. I usually check the tax records and see what they bought the house at when they bought it, what their equity, what kind of equity they might have. And then also, of course, asking the obvious, is there any other competition? That type of thing. What other tips and tricks might you add?
And I think you made a key point. I don't think you can take a broad brush to everything. I think I have loan officers that cover from Bakersfield to the Oregon border. And so we're in different markets, and we work first-time home buyers. We do a lot of loans in that 300 to 600, and we do jumbo loans from 700 plus, all over California, Oregon and Nevada. And it's going to be interesting because some markets you're going to see a decline maybe in a higher end home, but maybe not in a lower end home. So to your point, maybe there's less listings and there's more competition. So there's maybe not as much credit in the lower, but maybe in the middle and the upper, you have a little bit more listing. You have more listings and more credit. So I think to everybody, you kind of have to go out and get a feel for your neighborhood by talking to your local realtor. I mean, Key's awesome at that.
And I think the other point that you're making, if I could just quickly interrupt you there, is that you need to have someone experienced who understands those.
Very experienced, knows the market.
Yeah.
That knows what they're doing. Key is, again, I say her because that's what she represents, and that's who she is. And I think I think by having somebody, you have a professional all the way along from the front end to the back end, so that you're getting the best mortgage that fits your needs, or at least you have options. You're looking at homes that are what you're looking for, and you're getting educated along the way as to what they can do to make it the best possible result for you.
Right.
And that's the key, is making sure we're looking out for the buyer. You're the customer.
Yeah. At the end of the day, you're absolutely right, because with that in mind, every transaction, that's what makes every transaction different, because I like to use the phrase, everyone's financials unravel differently. So when I have a buyer tell me, oh, I had a friend who bought a house back in 1990 and they paid XYZ, and they got closing costs and all this and the kitchen sink, and they give them the dog. It's like, well, that was their situation. Your situation is always going to be different. There's probably information that they didn't share with you, or maybe they did share everything with you, but it still doesn't mean that that's how your situation will go. So I advise buyers to really be careful when you are in the market to buy. All of a sudden, what is that reticular activator? What is that thing called? When you start focusing on something and then you start seeing it everywhere. There's a word for it, reticular activator. I think it's something like that, but I may be saying it wrong in the first part. But the point is that you start coming into circles where a lot of people are having conversations about home ownership. Everyone becomes the specialist. The dentist is a specialist on real estate. Your neighbor, the babysitter, your uncle's cousin's father's sister's brother was an agent 10 years ago, and now they're doing whatever. But they are advising you, I'll say this, they just have good intentions, but take it with a grain of salt. You really, at the end of the day, need to rely on your professional real estate team, your real estate agent, and your lender partner. Those are the individuals who are at the forefront every day, full time. And so they'll be able to direct and guide you as you're getting this information from other people, helping you filter through what to take in and what to just kind of sit down and say, okay. Yeah.
Well, and I think you bring up a great point. We talk about people working with friends or family or partnerships. Some lenders and realtors have great partnerships, and I respect that. I think it's awesome.
Yeah.
And that's what makes the world tick. That's why I tell people, we talked about before, make sure you talk to a couple different people, because if somebody offers a program and somebody else doesn't, the person that doesn't, they really can't talk about it because they don't offer it. And so you want to just be able to talk to some different people to make sure, am I looking at all of my options?
That's a great point.
And am I going to take advantage of all my options? Mm-hmm. Because if you go close a home and you miss out on $39,000 of grant money, you're probably going to kick yourself, because that's in essence, it's almost like free money, because you're not paying any loan on that, and it is forgiven after a 5-year period.
We just had a consultation right before I came on the show with a buyer who said they were working with an agent and a lender for over a year, and she said she just felt like she was missing out on what was out there, because specifically the equity builder program that ended in November.
November 30th.
Yeah, that ended, and she found out about it after it ended and asked her team, why didn't you all share that with me? And their response to her was, well, we didn't, you weren't in contract yet, or you weren't sure, what house you, and so it's like, well, maybe that might have incentivized her, if she knew that money was going to be there. And so if you don't have someone, if you don't have a lender partner or and I shouldn't say it like that, I'll say it like this, just reiterating what Dyke said, make sure you talk to at least 2, possibly even 3 different folks in the financial spectrum when it comes to mortgages, because not every company has access to every program. And there are a lot of financing opportunities available.
That's right.
Did I say that
Well
right?
said.
Okay.
Well said.
So let's talk about these interest rates.
Okay.
So the Feds have approved a 1/4 point rate hike and signals more increases likely. That is what the Wall Street Journal is reporting today at 3:18 p.m. I didn't log into my Wall Street Journal membership here. Let me see. Oh my gosh. It's not letting me just log on. Anyway, while I'm trying to log on to the Wall Street Journal article, they approved a 1/4 percentage point interest rate. And I want to bring that up because there's a difference between the federal interest rate and mortgage rates. Can you help clarify that?
Yeah, so when the Fed fund rates go up, it's the rate banks are charged for overnight borrowing when they borrow short-term money from the Fed. That typically impacts borrowing rates, saving rates, CDs, money markets. So on the positive side, a year ago, if you had money in cash and you wanted to go put it in something extremely safe, like a treasury or a CD or just a money market, you were getting 0.00, maybe 1 if the 1 was added on the end. Now that number's up, and now people are getting 2, 2.5, 3.5, 4%. So you want to look at if you have some cash sitting in the bank, is it in the right account?
Yeah.
And you don't want to lock up for a long period of time, but at least a short period of time and take advantage of this. So HELOCs, if you have a home equity line of credit on your home, you've noticed the rate and payment on that going up. Your car loans are going up. Your credit cards are going up. That's what impacts those rates, is that Fed funds rate. It has an impact, kind of a rolling impact on these others. Mortgage rates are basically tied to mainly the 10-year treasury. I mean, it's a much broader conversation. I don't want to get too technical, but that is a pretty key indicator. And that actually, the interest rate on that dropped today because that is bonds. That's basically a bond, a 10-year bond, and the price of a bond goes up and the interest rate drops. Well, depending on what the market is signaling, the bond market, whether they think there's going to be inflation or recession, is whether or not that bond is going to go up or down.
Okay.
So right now, as you saw in bonds drop, so interest rates are going up because we were going into an inflationary period.
Right.
Because inflation erodes the bond, so they have to pay more. But now it's signaling the opposite. So you saw today the bonds went up, interest rates dropped about 15 basis points.
Now, are we technically in a recession? Or
it depends on how you define it. I think if the Feds define it by 2 negative quarters, you would say yes. But there's so much data out there that's mixed right now, and I think that's why the Fed, if you really listen, it's hard for them to take a brush and say this is really working, because there's a lot of things that are working against each other. We're in a really unique time right now that most people have never seen. Even
they're waiting
smart
for
people,
the indicators.
They're waiting for all the indicators to start to come down. They're trying to slow the market. And so we've seen the interest rates actually drop about 50 basis points. That's 50, 6.5 to 6, and they could be at par, meaning there's no points, high fives here.
And this is the mortgage market.
That's the mortgage. That's for a 30-year fixed rate.
So while you're hearing talk about interest rates going, this is the story of the day, the federal interest rate going up. The reason that I'm asking Dyke to underscore this, underline it, highlight it, is so that you can understand that there's a whole different thing happening in the mortgage interest rate market. Rates are dropping, and not drastically, but they are not in line with where the federal interest rate is with regard to it going up, with regard to the talk that they may even increase it further come March. So the mortgage rate is what you want to be paying attention to. If you are looking for information about interest rates, make sure that you are Googling mortgage interest rate, not federal interest rate. Make sure you're talking to a lender, someone who can give you that exact information on what that's going to look like for you, because based on your credit score, that's also going to determine what your mortgage interest rate will be. You want to talk a little bit about that?
Yeah, I mean, you're exactly right. And again, if you're talking around a 6, it's not the 3s we saw, but that was an anomaly. I mean, it was COVID related.
Yeah.
There was the negative side of COVID with all the lives we lost and the disruption in businesses and everything it did. So it was horrible, but we saw some incredible interest rates. Now we're probably more normal. I mean, this is where the 5s and low 6s is where we've been historically.
And it's where we were before COVID.
It's right before we were. So it really is understanding that. An interest rate is only a number. So until you lock in, that's when you lock in. But there's different opportunities for people right now to get some incredible. And yes, the lower your credit score historically, it has meant the higher your rate. Your interest rate goes up because the bank is saying you're a higher risk because you have a lower score. You haven't shown the ability, whether it's credit cards or installment debt like a car or a mortgage, to pay it consistently every month and manage your debt.
Right.
So your credit score drops, which means we got to have a premium. Well, right now, actually, Fannie and Freddie have removed some of those premium pricing hits
Oh, wow.
for first-time home buyers or people that make less than 100%, whether or not they have to not own a property. And so you could have somebody who has a low credit score who in the past, I would have said, okay, an FHA loan, a government loan would have been better for you because they don't have those hits.
Yeah.
The conforming Fannie Freddie rates are really expensive. Well, now we're finding they're not. So now there's, again, it's a great opportunity to stay with a Fannie Freddie loan, the MI, the mortgage insurance that you pay on a conforming loan after when you get the loan amount down below 80%. So your loan versus the value of your property, the mortgage insurance is removed. Where with a government loan like FHA, it's for life until you refinance that loan.
Right. Yeah.
So there's some positives to this, which again, most people don't know.
Yeah.
And until you sit down with a loan officer and have them talk about your scenario, what you're trying to accomplish, go through and make sure they understand that, pull your credit and run an automated DU, or if we're doing it manually, do a manual one. You don't know what you qualify for, or what your credit is, or what your pricing might be. And that's why it's so important if you're thinking about buying to go have that conversation, get pre-qualified, shop with confidence so you can tell your agent, this is what I'm approved for. This is what I'm comfortable paying. I don't want to spend any more than this. And so let's go look in this price range.
So there were three things that you said that just popped in my head that I want to bring up. Thank you for that. Thank you. That Dyke is very genuine and sincere, ladies and gentlemen. I'm just getting that from him. I appreciate that. And so there were three things that popped up in my mind as he was talking. Number one is you cannot be afraid to look at your credit score. You have to do the work. If you've not looked at your credit score in 5 years, 10 years, if you know your credit score is bad, but you're thinking about home ownership, or you never thought about home ownership because you know your credit score is bad, and so therefore you just stay where you are, you have to get the courage. Be bold. I encourage you to be bold and courageous and do what you need to do to have your credit score looked at. You can go online to mycreditscore.com, I believe. So there are so many credit score tools out there. I always encourage people to go to Blue Water Credits, Jeff Sipes at Blue Water Credit, bluewatercredit.com. Give them a call. They'll have a 15-minute free consultation with you to tell you what it's going to take to get you where you need to be. And you just have to start with the conversations. So that was the first thing, is take a look at your credit so that you can get that thing figured out. It may not be as bad as you think it is, or it might be horrible, but you now have a plan in place to correct it. And the time that it takes, a few months, 6 months or whatever, that time is going to go by anyway. So why not, while that time is going by, have your credit being repaired, have it being worked on. The other thing that Dyke mentioned, well, the other thing that came to me as Dyke was talking is that it is so important for you to feel that you have been served, especially in our community. There is this stigma that we think just because someone in a position of authority took the time to talk to us, we should just feel honored that they talked to us. And I want to tell you today, right now, no. You need to be very clear. If you call or talk to a lender, someone refers you to a lender, and they're not giving you the same vibe that Dyke is giving you right now, then you have not been served. If they're not going into detail, the way that you just heard it right here, if they're not taking the time to if you don't hear the passion, and yes, I'm going all the way there. If you don't hear the same passion that's coming from his voice out of that person who's talking to you, then you need to try to connect with someone else until you do. Do not just stop at the person who just says, here's what you qualify for, here's what's available. Feel comfortable asking questions. Feel comfortable. They should make you feel comfortable and feel safe to expose that's the other part too, is you want to tell them everything. You don't want to be holding anything back, because guess what? They're going to find out anyway. It's all going to come out in the wash and you don't want it to come out at the end of the transaction. You want them to know things sooner rather than later, because they're the experts. They're the professionals and the specialists. They've been doing this for years. They've seen it all. So there's probably nothing that you can surprise them with. The bankruptcy, the divorce, the hidden money, the, whatever. You have to share it all up front, because that way they can then package it. And I think this is the fear. The fear is that if I share it, then I won't qualify. They won't help me. And I'll tell you what, the person that decides that they won't help you because you have some hidden secret, that's not the person for you. You need to go and find the person that says, oh, you know what? I've seen that before, and here's the solution. Oh, don't worry. We know how to deal with that. So you keep looking for the right person until you get that person that's going to take the time to walk you through. And I totally forgot what the third thing was, but I'm sure it'll come up. But we got to take another break. When we come back, I see some questions coming in the chat. And so we are going to actually, let's dive into them right now. Diane Thomas says, what about construction loans? So Diane, I said Diane, Dion. So what about construction loans?
So great question. Yes, we do. People that want to build a home, we do land loans. And then when you're ready to build, we do the construction part of it. And the construction turns into permanent financing.
Okay.
So we do all that process. Some people will buy the lot first and then look to build once they get all the permits down the road. And some people will look to do it all at once. You can do it either way. Okay.
All right. And so, Dion, we will get that information out to you before the show is over. Stay tuned, because Dyke's going to give his information how to get in touch with him. So Johnson family is saying, is the information you're giving out specific to the Sacramento area, or are these programs available nationwide?
Great question. So there's 7 federal home loan banks. And I'm not sure, I'll talk about this one. It's a great question. In fact, I'd have to ask somebody if the others are doing the same thing, but the one here covers California and Nevada for sure. So we can offer the WISH program in California and in Nevada.
Awesome.
Throughout the entire state of both states.
Wow. Great question. Miss Sequoia, hello. She says, what is the minimum credit score, and can you have a bankruptcy for WISH?
So WISH is only a grant. They don't look at credit. They don't look at bankruptcies. It's, can I get you approved through Fannie or Freddie? Once I get you approved, that's the loan. The WISH or the NAIC I was talking about, that's the grant that we use to lower the amount that you have to bring to the table, or that you have to borrow from the bank.
So that tags on to a loan that's already happened.
So credit score, I'll say this. The minimum credit score for Fannie and Freddie, I'll say, is typically 620. But Fannie and Freddie came out with a new way of calculating credit recently. I've seen one of these situations. There's maybe some listeners who are lenders who have seen more, where one person had a 590 and the other borrower had 730. They took the blended rate. And so when you add those together and divide it was 670, and we got back an approved eligible.
Wow.
So it's something brand new. It's just come out. I'm going to be very careful about putting my,
stamp on that,
my mouth, because then I'll be called to the table. But it's there. We've seen it. It's just hard to understand until you see a bigger track record about is there a dead minimum that they won't do?
Right.
And they really can't give you all the details. But we have had one, and it did get approved. And
so that only happens as far as knowing if it can happen. That part happens is determined in underwriting. You don't know in advance.
We plug in the information into what's Fannie and Freddie's automated underwriting systems, and then it spits out whether you're approved, you're approved with caution, or you're denied. And so if you get an approved eligible, you can read why, and they'll explain to you why. And that was one of the things that says, yes, although it was a credit score below 620, we blended the rates, and we're going to use this number as the credit score, and the borrower was approved.
I've never heard of that.
It was awesome. So again, more that Fannie and Freddie, I talked about removing some of the pricing hits for lower credit. It's I think more that, because they're the 2 biggest lenders in the world, I mean, in the country. That's where everybody who does a conforming loan sells their loans. Some keep the servicing like we do, which means if you have a problem with your payment, you can always call Tri-County's Bank. Some people sell that servicing, but they're trying to do what they can to open up that lending box, to more first-time home buyers, to help them get into homes. So it's baby steps, but it's going in the right direction.
Yeah, because I've heard that at the federal level, that this is what they're trying to do. So this is actually the results of seeing it trickle down, because you hear different government entities say what they're going to do for the communities, but you rarely really see it at our level.
Right.
So that's a great example of it actually showing up. We need to take a quick break. Really quick break. Well, no, not a really quick break. When we come back, we will only have a couple of minutes. How about that? You're listening to 97.5 FM KDEE. I'm Agent Key, and we'll be right back. Ange, did you have a question?
It's live on KDEE Community Calendar website with the link for them to register.
Live where, Angela?
On the community calendar on the community calendar link on the KDEE website. So I'm gonna go.
And I emailed you, Monday, the link.
So
You
I
did?
am
Okay,
gonna
perfect.
go.
Awesome. Thank you.
You okay?
I'm gonna go to the website right now and then put the link in the chat for everybody. Community calendar.
Well, how's it going from your point of view?
Very well. I'm actually, you know what? If you keep me engaged, that means it's
Well, hey, that's the way that's
man,
it.
if I start bobbing like a bobblehead dog,
On his way to sleep. Oh, here it is right here.
Blown it.
no, you guys.
Join Tri-County.
Man. I like
Here's the registration link. Okay, let me test the link before I put it in the
I
chat.
can say you get to hear a lot from live.
a lot.
Really good people, I'm sure.
Man, a lot of stuff you guys say, you can really apply it to life too. You know, it doesn't have to be just real estate or whatever.
No, it's at some point.
Okay,
You're right.
there it is. That works. Okay, so I'm going to put the link in the chat here, y'all. Miss Dion, sorry, I had to take a call. Not sure if you answered my question about construction loans for land and building. He did, but Dyke, you want to answer her question again? She said she had to take a call, and so she left. She didn't hear you say it. What did you say
Yeah,
about
so we
construction?
do land and construction. So it's a true land and construction. So you buy a parcel of land that's vacant. May have an outbuilding, but it can't have any living buildings on the property where people could live, bathrooms, kitchens. And then you could get a construction loan from us either immediately within a couple months or down the road. So we do both. I have a construction specialist who takes care of that, and it's one of the things that we do and do really well.
Okay. Did that answer that for you, Dion? You want to give her a contact number to?
Yeah, why don't you?
Which number should I? What should I put in here for Tri-County?
Go. I'm going to send her to the website, then I'll give her a name to look at. So Tri-Counties Bank.
Tri-Counties
Bank.com.
Oh, that is not bank. Tri-Countiesbank.com. Okay.
And it's our website, and click on the personnel.
And then click on personnel.
And then mortgage.
And then mortgage.
And she could select any rep she chooses. If you want to put a name there who's local, it'll be Mark Ray.
Local rep is MARK?
Yep. RAY.
Mark Ray. That is okay. Okay. She said, can we buy the land? Can we buy the land and do the loan at the same time?
Yes.
Oh my gosh, I heard of your bank years ago. Hey everyone, we are back. You're listening to 97.5 FM KDEE. We only have a few minutes left, and I want Dyke to talk a little bit more about the event that's happening. And it's actually now posted on the KDEE website. Before I give you the details, Dyke, can you go over the event one more time?
Yeah, so it's going to be a home buyer education workshop. It'll be myself and my boss who's in charge of all of underwriting and ops. And so you're going to get to talk to somebody who actually makes decisions and looks at loans on a daily basis, which is kind of a treat because you don't get to hear from that person very often. But it's going to be on February 28th from 5:30 to 7:30, Highlands Charter School in Oak Park. So it's the Oak Park location, which is at 2520 33rd Street in Sacramento.
Perfect. And I just posted that link in the chat feed because you do need to RSVP. They would like everyone to RSVP. And so there's an Eventbrite link. If you just go to Eventbrite and type in Tri-Counties Homeownership Workshop, it should pop up. But if you're watching right now on social media, I put the link in. So it's there on YouTube, Facebook, and LinkedIn. And please register. Please register. Again, that workshop is February 28th from 5:30 to 7:30 p.m. at Highlands Community Charter. And it says at the location address, Technical Schools, 2520 33rd Street, Sacramento, 95817. And that's in Oak Park. And I actually was at that. I was telling you earlier, I was there visiting the campus yesterday. They're doing amazing things over there. So I'm excited about what you guys are doing here at this event. You'll be talking about the WISH program there.
We'll go through the WISH, the NAAC. I'll talk about our homeownership access program, which is it's a credit people can use for closing costs and or buying down the rate that's offered in certain census tracts for the underserved. We'll be talking about basically the entire loan process, what to expect, what we look for in underwriting a loan, what to be prepared for, and anything else anybody wants to raise. But it's a really informative, educational 2 hours.
So people will get an opportunity to ask questions then.
We had a ton of questions, and we even stayed another half hour the other day and answered questions for
good.
people who wanted to stay, and that's specific individual questions. So
Good.
it was, yes.
So we do have a couple more questions here. Can I use your realtor as my agent to secure the loan, and you guys work with him to get the approval done? Okay. You might need to ask that question. Are you saying that you have a realtor that you want to use and then you want to use them to get the loan done? You already have a realtor? Or are you saying, can I use your realtor as my agent and work with him to get the approval done? Dion, I think you're saying clarify, just clarify. The answer will probably be yes, because I think I understand what you're saying. But yes, because you can use whoever you want. When you have an agent that presents themselves with a lender, doesn't mean that you have to be committed to that lender or that agent. You can go find another agent and keep the lender, or you can go find another lender and keep the agent. Dyke agrees. Stacy Lynn says, do you have to attend this workshop to apply for the grant?
No, you do not. Nope.
Great.
You feel
question.
comfortable, then go on our website, tricountiesbank.com, click on the personnel box, and then click on home mortgage. I have 20 loan officers that cover the footprint. Pick any one of them, call them, set up an appointment either on the phone or face-to-face, and they can walk you through and do exactly what we're talking about now without going through the home buyer. So that's not anything you need for the loan. It's more of an educational opportunity.
Yeah. And it's really, really needed. It's needed to get a lot of people off the fence. But if you know that you're ready to pull the trigger and you know that you're ready to take the next step and just do whatever steps are required to get you into a home, go straight to the website, contact the lender, get the process started. Ladies and gentlemen, that is my time. Wow. See, this is why we don't take phone calls, because the time go. I don't have Jay's 2-hour show. I don't have the luxury of taking calls. So the next time you speak to the powers that be, tell them you all need to give Keisha a 2-hour show.
I'll work Jay there.
Thank you. Thank you,
But thank you, Keith, for allowing me to come on today. And I hope this was helpful to your audience. And
I think so.
I thoroughly enjoy it. And to me, it's my passion, just helping people. And
I
if
can
get
see that.
a few people in a home and put a smile on their face and help them in the most efficient way, giving them the max, as much of an opportunity, then that's a great thing.
I appreciate that.
And that's what I'm here, and that's what our bank stands for.
Thank you for taking the time to be here too. I know you're a very busy man, so I always appreciate your presence. Always great to see you too. He's just a joy, you all. He's a joy. Thank you all for tuning in. And remember, if you are doing what you were created to do, I will see you at the top. Oh, Tiffany Brown. Oh, we've got a couple more questions here.
Okay.
Most mortgage companies want you to work with a realtor to help you buy the land. Well, you definitely do need a realtor to help you buy the land because that will involve a contract. And so you'll need a realtor to represent you in buying the land. So definitely, if you're looking for representation, we can definitely represent you. If you have your own real estate agent, your agent can represent you, and you can still connect with Tri-County Mortgage to do the financing. So maybe that helps answer the question. Tiffany says, what was the credit company you recommended that someone could call to have a 15-minute consultation? Blue Water Credit, www.bluewatercredit.com. Let me put that in here. Blue Water, yeah.
Jeff and his team.
They are. I like them because First of all, they're local. They're not gathering all of your data and sending it somewhere to the Philippines. Second, they actually have a system in place where they're either going to help you do what you need to have done in 6 months or less, or they're going to tell you in advance that they're not going to be able to do it. They're not going to put you in some type of situation where you're paying. I've heard people pay 6, 7, 8, 9, even $1,500 a month to get their credit fixed. And that's not what they're doing here at all. If you let them know in advance that you are trying to get your credit mortgage loan ready, they're going to look at your credit situation and help you map out a plan to make sure that they are targeting those things that are going to fix your credit to look the way that a mortgage lender wants to see it. So there are certain things that need to be on your credit report in order to make you mortgage eligible. So they work with you in that regard. So hopefully that will help. And then of course, the other thing is that okay. We're back, y'all. Sorry. Let's see. I got your guide, Jamal, already. So this is telling me I'm going in the right direction. Yes, you are. You are. Thank you so much for this show. Our pleasure. Our pleasure. Thank you all for tuning in. Tiffany, you are welcome. You are so welcome. So same time next week, y'all. See you next Wednesday. Bye now. Okay.